Well, this is a presentation is going to be about the journey that a lot of FBS users go on and are already on, and probably seem like they're on an endless path. And so this is an audience participation presentation, one that we like to know some of the challenges you faced, and maybe even anticipate as far as moving ahead. I'm titled the program Mind the GAAP, and which is a play on words with we just got back from London. That's one of the common recordings you hear when you get off of the tube, the subway. It's mind the gap between the train and the platform. But we're expanding it over to GAAP, the Generally Accepted Accounting Principles, and just building on some of the things that we discussed yesterday. Todd Doring from Farm Financial Standards had an excellent presentation about the background on Farm Financial Standards, and some of the clarifiers they've got about not trying to repeat GAAP, but trying to adapt to the farming operation. And we talked about crossing the chasm as well yesterday, and that's again what we're talking about, making the leap from where you're at right now to where you want to be. So I've got there we go. Okay, so the premise here is, what's the logical steps to bridge the chasm between your current accounting system and where you need to be to utilize the technologies and practices we've covered in this conference? And as you know, at the very end, we're talking about APIs and web connections and seeing the big world of all the different technologies and ecosystems out there, and realizing that nobody has going to have it all, and we definitely don't have it all. We think we've got a good start. So I stole this slide from John Hook, but I think it's an ideal summation of what a lot of computer users are facing. It says, and it is why digital transformation can be so frightening. Companies must shift their focus from what they know works, invest instead in alternatives they view as risky and unproven. And that is the gap that a lot of people face. And another quote I picked up from yesterday is Joe Dykeye says that FBS's strength is its flexibility and robustness. FBS's weakness is its flexibility and robustness. So we recognize that we tend to err on the side of flexibility and capacity, with the idea that there's a lot of learning curve and options to run into. And I'm going to pause right now, see if anybody's got anything they want to add or contribute to that thought pattern. All right, so we're waving by. So, all right, let's think about that. All right. So just thinking in terms of where you're at right now, we'll call that the current state. And current state is less than ideal. There are probably some technical problems, things that you want to get accomplished that you're not getting accomplished. But that leads to business problems, and that's more critical. And but by not being able to do what you want to do technically, it can affect your bottom line. And we're going to try to analyze that, and really get down to the root cause. Is it really a technology problem? Is it a training problem? Is a culture problem? And one of the real challenges that we face, and that this goes back to the first presentation we heard yesterday, is that producers would be motivated to change if they could see the impact of their bottom line, see whether it contributed to their profitability. However, most producers don't know what that is, don't even have a baseline. So it's they really don't know what they don't know, and this is a struggle we come in with technology. Is how do we help them along in that journey to make a meaningful change in their business. And I'm going to pause again to see if anyone's got an example of something that they're struggling with right now, or have recently struggled with, and maybe see a technical solution, or but actually more importantly, they've identified this as contributing to a business problem. Integration. What we know, it solves some technical problems getting data recorded, but what's the business impact of that?
Norm, I think one of the issues current state is where we're so fragmented in information systems. We have FBS here, and we have granular service on the side, or in the big world, there's different systems, but they don't talk to each other. And it's having the ability to talk to each other without multiple setups, having interview data once, and not getting bogged down and have a dual silos to get the same thing.
Okay, you just described a technical problem, didn't describe the impact that has on the business. What possible impact?
The impact is dysfunction. You got multiple people doing the same thing.
And what's the bottom line impact?
Well, as you have dysfunction, that costs the dollars.
Mm-hmm.
There's more dollars affected.
And how does it affect those dollars? What?
Well, it's a negative impact on margin.
But you're talking about wasted
resources, and in some cases, maybe there's a person that's doing low-level things, doing data entry or things that should be automated or recorded, where the time is probably more spent in looking forward, looking into the future, and forecasting. That's where those human resources. What could those human resources be doing?
Mm-hmm. Okay, underutilization of that, and what kind of decisions would they be making? How's this affecting the decision process?
Well, you got decisions that each and every day, marketing decisions.
Mm-hmm.
What percentage of markets do you need to have? How much? How well does that cover your costs? Being able to forecast out, going your working capital needs.
Mm-hmm.
Looking forward is that's where the real decisions are. Is when you're looking forward. Mm-hmm. And I know in my case, I spend too much time on the historical, where I really need to be spending time looking into the future.
Mm-hmm. Okay, Randy, you have any?
Well, I was going to say, Daryl sent me a YouTube the other night about in businesses we should be setting goals, and KPIs are a way of measuring your attainment of those goals. And if you spend so much time trying to figure out what your KPIs are, you don't know if you're hitting those goals or not. Mm-hmm. One of the problems is knowing how close you are to your goal.
Mm-hmm.
Sometimes because of the lack of integration, and like Daryl talked in data information, but you just never get to the point of understanding how close you are to meeting your goals in some respects. If the goals and sub goals, and
mm-hmm.
you tend not to divide and conquer if you got too much trouble getting there.
Mm-hmm. So what we're talking about is management recognizing the gaps that they're facing, and and trying to quantify that. And there's a reason behind that. You know, there's a sense that I'm missing something, or I must be missing something. I don't have that information available. And we talked about yesterday about shiny objects, and that's too often that's been a lot of technology sold to the farm as a shiny object. It's pretty flashy. You can see some benefit, but it doesn't really drive to the real business goal. And then asking what's driving change, and we had a discussion last night about the new generation coming in and having a different view of the world, and reworking the system. But there's somebody in the organization is driving change, and we'd like to know what that is and what the benefits are. Again, anybody has anything, you're welcome to join in, because this is a interactive process. So being realistic about the gaps, we're asking somebody or somebody's asking us, I want to get to this future state. You're looking at some real costs, and the costs are financial, true, but I think human resources and time is just as much of a barrier as cost. You know, I'm going to have to change the way I'm doing things. I'm going to have to learn a whole new system. As we said, that going back to the second slide about you're asked to go off in some unproven process, giving up what you're comfortable with, even though you realize it's not very efficient. But I think we can all identify with that. What's the ROI on this? And the irony is that unless you've got starting with a management accounting system, it's pretty hard to measure the benefits of change if you don't know what your baseline is. And we've been told this many times, the juice isn't worth the squeeze, but that's another way of saying that we're afraid to making the change. We don't think we've got enough information, but we think it's going to be painful, and we realize that. The other side of things, being realistic with a client, and this is consultative sales, is what they're asking for, or what you're asking for, too trivial. It's something that really doesn't isn't worth all the time and effort, technology, software, training, just the general adaptation. Is it really worth it? And on the other side, is it too hard? Is it too expensive, too technologically challenging, going to take a whole rewrite of software? And we try to be as realistic as possible. As we said, the FBS is very flexible and robust, but there may be something more issue upstream. You can't really collect that information. And so anybody want to share any ideas or concerns they have, and again, something they want to do, but they don't think they quite have all the ducks in a row to do it? And Daryl, you're always thinking ahead of the curve. But we've looked at the technology changes we're making with MASA and going to cloud-based reporting. Now, that may be cool, be shiny object for some people. It may not have a direct financial benefit, but what are, and there's a learning curve, there's technology and infrastructure and everything else put in place. Is agriculture ready for that? And that was one of the questions I asked the presenters yesterday. Are you ahead of, how far ahead of the market are you? in what you're doing. You're solving a problem that nobody's clearly identified yet, but by golly, that technology is out there. Let's put it to use. So, anyone want to chime in on that?
Well, Norm, I might go back to the juice, the juice worth the squeeze question is, technology keeps coming along where it's easier to get some of those answers than a month ago or a year ago. We're actually with Power BI, we're modeling what the future looks like based on it's just a lot easier to model what the future looks like, basically. And we didn't have that ability or experience a year ago for sure. So sometimes it's easier once you progress down that technology route.
Yeah, didn't have the tools to look forward. So I mean, we're all looking at this black box, not really having a good sense about going to change the way we're doing things or technology based. But I really have no idea. I know I spend a lot of time in learning what will my decision making be more timely and better clarity than what we had before.
And I really think the Moss group having that ability to have some pure experience to you don't know what you don't know or you don't know how, but there's resources within the group, people that you can call up from another organization and say, how are you doing it? And it's just another way of getting by that pinch point too.
Yeah, and we had some I think Christy has terminology there, and I'm going to get to that screen quickly. Okay, so as we work with customers, clients, there's several questions that we raise, and you can raise yourself about what you want to get done. I think if it's a brand new client, one of the questions is how many umbrellas do you have, and are we going to help you? And there's two extremes of umbrellas. You've got the operation that's got 10 business entities, and they're done for tax purposes, liability purposes, for control purposes, but they don't have a good handle about how they all interact. You can't get a consolidated look at the business. More typically, we have a single umbrella, and there's all kinds of things going on, all kinds of enterprises and cost centers and everything else, and not a good way to see what's going on underneath that umbrella. And I think you're looking at who's online. I think there's kind of a combination of multiple entities and single entities with a lot of activities going on. And we've designed things to handle either way. The combining multiple entities is a little later. It came a little later on our development cycle, but that's and it takes more power, and that's one of the things we're talking about a MASA database. When you can query across different entities and within your system, but better understanding. But that's the reality we face. The other thing is, as we're thinking about conversion, and when we're talking about conversion, this could be from somebody running QuickBooks or FarmWorks or something along that line, or they could be FBS that have been on our system for years and years and years, kind of grown some habits and practices. But the challenge isn't so much mapping many to few, it's few to many, because you've got probably some really simple records, and you'd like to be able to convert that into the detail that you want to have in FBS. But you have the historical data, you have the ongoing inventories of projects, how do you get that, split that out and get that going without, and most people want some historical context, even if they're getting started and fresh in FBS. They want to be able to go look back and do some kind of comparisons. QuickBooks, you may have some things in classes, but you're not going to have quantities. You're going to have details there. And we'll give some examples of FBS and different transitions of how to do few to many. But it is people ask us, well, can you convert my QuickBooks data? And we said, yes, we have, but you're not going to have it needs to be a clean cutoff. And we need to be able to find the point when you're transferring dollars from a balance sheet to purely ledger account value into the kind of project level detail we'd have in FBS. All right, so this goes to what Randy and Daryl were talking about. This is something that can you guys define the difference between a pioneer, migrator, or settler? Remember you had to say? Yeah, people thought they were pioneers, but it turned out they might be migrators or settlers. And a pioneer is the first one to do this. This is really risky, and this is a cultural thing again. Where do you fit on the adoption curve? And this is part of crossing the chasm. Are you innovator, early adopter, early majority, late majority? And when we talked about crossing the chasm, that's been the challenge in a lot of different areas. There's certain cultural, smaller minority of cultural people are ready to adopt and take risks but there's not enough to really fund a industry. And so we saw that in precision farming. Like Pat's example was auto steer. Took long to get going. People got to the auto steer process, but we didn't get any further in their management. So thinking about where you're at, a settler is pretty safe. You got a lot of other people doing the same things. You're not finding not to move to the new frontier. You're getting used to how things go, and a migrator is kind of in between the pioneers and the settlers. You guys have anyone who's heard Pat's talk yesterday might welcome to chime in. So the next area challenge is, what's the hardest thing we asked you to do? And those of you who are run through FBS, I would like to hear what are the hardest tasks, hardest requirements that our software expects you to accomplish.
Well, Norm, that's a big question because it depends on the growth path, maybe the maturity level that the FBS user is at. The setup and the startup. I think the first challenge is just all the new code. Again, how detailed you get, the number of center codes you have. If you get into feed or drop inventories, you got a whole other list of terminology, in terms of names. And maybe it may or may not match up with the description on the co-op invoice. And then you get to the quantities. If you're not used to managing quantities, that's just another level of detail.
Yeah. You're bringing in.
Okay, and then once you get past that stage, we've got the whole new world of the different style of reporting, different report levels, cost center reporting, profit center reporting, cost analysis reporting. There's just a whole new world that most people haven't been exposed to in traditional accounting.
Okay. Buddy, also gone through. I don't want to call anybody by name, but somebody wants to jump in with your experience, either historically or currently with FBS. What do you find the hardest to implement and understand. If you want to, you can send us you can chat with us if you like. You don't want to speak up, but I got it. I do have a. You go ahead.
Oh, yeah, I was just going to say, it's just the challenge of employees and training and just all the setup issues. And I think that's probably the biggest challenge, because it is such a robust software that it just takes a lot to get someone trained and feel comfortable to do all the setup issues.
And what is happening in a typical modern farming operation? If you when related to setup, what's going on?
Well, I'm just talking about I end up actually doing most of it because it's just easier that way. But all the different things for feed ingredients and feed rations and how they're always changing, especially now since we're running our own mill. So I've got 3 entities I have to set all those up in. So it can be time consuming whenever we make a change.
Yeah.
And I mean, that's just one example of, because I always try to go through and inactivate things that aren't in use, just to help keep from people making mistakes, and it's very time consuming. I wish there was a way to do it once and have it work in all the different companies.
Yeah, so that's an ease of use issue. You've identified a couple other things as well, and that's the constant change, constant growth, bringing on new farms, new projects or centers, and so we get the center set up, and that's something we can sit down with you and flow chart this out, or help you understand about the current centers, or what about next year, or those you in livestock, you bring on a new contract farm, remembering to do everything. And along with that is who's responsible, who's going to be, how do you train other people? Marcia is the master control person, because she understands it, probably makes sure things are done correctly. But it's that's all that is going on, and more complex the business, more things there are to track. And we made a conscious decision that we're going to put our emphasis on the flexibility and robustness at the expense of ease of use. Now, we do some things, the whip wizard, you create a production center, it creates a whip center, but there's still a lot of things behind the scenes that aren't behind the scenes that you have to, if you especially got management accounting, you need to do. And we've talked within the MASA group about one of the vision points is and I don't think it's would take a whole lot of development effort, but to automate a lot of these functions, kind of a wizard that takes you through as you add new segments in your business. But that's we're very conscious of that, and you can develop SOPs to train other people. There's a bunch of things going on, and I've had several recent conversations with people that things are getting along fine until they got a new employee. New employee who's trained by an older employee that had never been really adequately trained to really understand it. So you got two separations there of knowledge, and you can do some really unpleasant things by not understanding how the system works. It's not something you can unwind. We try to make it easy to do that, but still it can be frustrating. Do you have anything else, you guys here that are? Okay, so I want to pick the hardest thing we ask people to do is inventory control. That absolutely is depending on what the final outcome is, whether it's management accounting or just closing out their inventories for the crop year. it's things that isn't watched, and then people do some rather dangerous things and cleaning them up, and that's part of that is exacerbated by the fact that sometimes we put too much detail in the early stage of the operation. I'm getting better at this, but I'm still not far from perfect on this. But listing what producers want to do, what the clients want to do, and then trying to emulate that, and realizing that maybe they were depicting the ideal scenario, and we've set them up with more detail than what they can track, and that gets to be unwieldy. So there's an art to what we're doing, and that's one of the arts, figuring out how can you gradually ramp into a system, layer in new levels of detail, but not necessarily do everything that people are asking us to do. Any response to that? Any feedback on that topic? Okay, so one of the things that in challenges again FBS is that not many people are using the entire system, and I don't think there's anybody using the entire FBS system. There's always between the overlaps between crops and livestock and different segments of and requirements, or they want asset management, they want feed budgets, or there's just so many different options. And so we've built that flexibility, but there's not a central path in order to go along with this. So I've got one comment for hardest things, coming into an already set up FBS system and not having good training in person, not having a finance background. Boy, all that is hard enough when you're the original recipient of the training, but you're coming in and trying to pick things up. So we want to be able to help answer that question and give you background. There's two ways people learn. Probably more than that, but our experience is the ones that read the manual and study all things out, don't do anything until it's safe to come out of the water, and the other is, I'm a guy, I don't need any instruction manual, and I'm just going to pound away and get this in place. And that's a good software. In theory, you can start off at a simple level and expand it without, it's so intuitive that makes perfect sense. Our experience though is that we're here to help and understand and guide and coach you. There's just too many flexibility options, too many things going on that's unique to an operation. That's why you're farming, you're doing creative, you're doing all kinds of mixing together. We can do our best to get you the background, and I'll point you to some materials that'll help you understand better what we're trying to accomplish. But on the other hand, they're a broad brush, and you maybe understand a little better the concepts, but it's applying this directly to your operation that's going to be the challenge. Now, the last thing we have here was too much data, and that was, I think the quote, and I don't have it right in front of me, yesterday was that too much information. He had an abundance of information, a poverty of attention, and it's again figure out prioritize things.
It was a wealth of information creates a poverty of attention.
Very good, thank you. Good notes. So Randy's the one that reads the manual and makes makes a note. But that's, I think that is a, see how that happens. And that was Acumen's people were talking about ways of taking things beyond just even what we call our standard KPIs, or looking at things like margins and really looking at the cost of dysfunction, things that we're not watching, and especially large systems, large complex systems, be able to isolate where problems might be emerging, and so I think one of the things that we've encouraged is electronic import from field data, feed mill data, backer data, all that. Is basically that information is free. You got all that detail, but it also creates, if you can't manage that level of detail, especially inventories, it creates an unwieldy pile of data. Okay, so realistically, when we're working with a new client or existing client, we have to come to an agreement, a plan. It says the first one is you have a problem we can fix, and that's, again, is it too trivial or too major? Is it something that doesn't apply to, can't fix with software? Do you agree you have a problem? And that people only approach us, I think, if they realize they have a problem, and that there's vast majority of producers large scale don't recognize they have a problem, and there's no way that we can offer them a solution. And do you want to fix the problem? And that's come to agreement. And then the hardest one, we go on a journey with us to fix the problem. And we've done this with countless operations, and there are some that we have failed at. For whether one reason or the other, they weren't able or willing to make that trip. So let's talk about some current state, future state variations we're working into. Presentation from Heather Broughton yesterday on Canada is that I was an impression that Canadian producers are filing taxes on an accrual basis. I may be totally off on that, but that was not a barrier that we have here. Whereas virtually everybody that's, except the really big integrators, are filing taxes on a cash basis. So they got cash basis statements, and how do we get them to accrual? And there's various flavors of accrual. There's a adjusted accrual that works off of cash and converts into accrual, but you're basically managing by cash and reporting occasionally by accrual. You're making market value adjustments to inventories and forcing in values. It gets a lot more complicated if you're doing going from cash accounting into monthly accruals and knowing where your balances are. Then we got the lumpers and the splitters, and I can help splitters. Splitters have keeping all kinds of detail, but they can't make much sense of it. They got it all in buckets and inventories, and lumpers, everything's a general farm. So you have, and you may be working with software that by nature is going to be a lumper, big bucket accounting, non-agricultural accounting, got a whole bunch of dollars, and you have something, but they're to be able to match the timing, and matching that is a challenge. And then the do-it-yourselfers, and frankly, a lot of operations are do-it-yourselfers because they can't get any good accounting help. They've got their CPAs can give them some tax advice and directions, but actually walking through this so they developed a system, and that's been it's a free country. You can go do that, but then if you want to have something meaningful, both for your own purposes and for benchmarking with others, you need to follow standards. And we had a presentation yesterday from the Farm Financial Standards Council. A lot of excellent resources. You have to dig through 300 pages in the financial standards, but we'll almost talk about an implementation guide that's going to help a little bit in that regard, to help narrow things down. External inventories. A lot of operations are keeping their accounting in one bucket and their inventories in spreadsheets or something like that. And so what are the and maybe getting along fine with that, what are the challenges of doing it that way? Anybody want to?
Well, the biggest challenge from my perspective is which system has the version of the version of truth. Which system is right? Because they never reconcile.
Mm-hmm. Yeah. What's the final version, the version of record? You know, what's right? And typically people keeping track of external inventories, let's say of crops. How do they value those crops? What's the process for doing that? Methodology.
Well, first of all, most people value it in a spreadsheet because they've got a combination of cash contracts and the open market. So there's a spreadsheet involved to do a weighted average
Okay, weighted average of
cash and cash
Okay.
contracted deliveries. Yeah.
And yeah, and I think that's it typically is some type of your own valuation methodology that may tie back into some type of quasi market value balance sheet, but you may have priced it based on the contracted price, or it most likely is not cost, and that's the challenge, cost basis. And Daryl's going to talk about the different basis of accounting in FBS, but that's the future state is you want everything integrated and to tie out so that your cost of growing crop rolls into your cost of harvesting crop or marketing center, and that adjusts as you sell the crop. Again, if that's your future state, it all needs to be tied together because you never know what number is right. And that's the challenge of working with some of these cloud farm management systems. They have ways of tracking some of these things, but they aren't tied back to accounting. If they're accounting, they're very high level, not down to the detail. So we're going to show you a tool we put together many years ago. It's called Growth Path Accounting, and it's been adapted. And John McNutt in his younger days helped us, and Bill Young kind of helped us originate this idea. And the idea is have a decision tree, and just I've got a quote. Yeah. Okay, so the idea is to figure out step one, where are you right now, and are you cash or accrual? And the idea is that if you are strictly accrual, you're probably a larger operation. You probably have accounting oversight involved, and if it's professional, you can do real-time financials. Maybe not having a lot of management detail, but you're working. Somebody's updating your balance sheets, and you're not so concerned about managerial accounting. That ends up with method A, and this is method A, method B, method C and method A, B, C are the combinations of things. So follow that through. If I'm on cash accounting and I don't need, my goal is not real-time inventories, then I'm method C. I'm most likely using transaction plus by itself, cash basis, and my balancing methodology is my checkbook. I don't have anything in inventory wise for inputs or anything like that. And so method C, non-integrated, pure cash accounting, no inventory tracking, only see account once a year, production is separate database, and very retrospective. So, and that doesn't, I don't think describes anybody here on this call, but let's look at this is the method A, larger operations that aren't doing managerial accounting, but are working with accounting oversight. And that can, yeah, you can use a this called accounting focus. You can do some high level cash and accrual. The accountant is making making adjustments either on site or remote. Do an annual quarterly financial statements, professional review. Production is going to be in a separate database, and they're going to manually adjust the financial statements. And then we have the method B, and that's I want cash basis to real-time inventories, or I'm doing accrual or cash and accrual, and I want to do enterprise analysis, some really simple allocations. And that's where the vast majority of FBS users are. They're not really reconciling their financial statements, their balance sheets to their costs, but they are tracking inventories, input inventories. We're doing a simple cost analysis, which does percentage allocations of indirects, but they have to have tied out animal, crop, and input inventory. So that's a big leap. Again, that's the hard. If you get to this level, you've done some of the hardest parts of adopting FBS. The cost analysis is through reports. What I mean by that is we have a cost analysis functionality that picks up the direct costs, and it does a percentage allocation of your indirect costs, but it's not based on running off the general ledger, running off the actual hard posted entries. And this has limited professional involvement. Professional involvement would probably be just the accounting for tax purposes. And this is the system we ran through the first 20 years of our existence was this method B. That was our goal, integration. Then we get to method ABC, and that was we wanted cost analysis, but we wanted to do a managerial accounting approach. And so method ABC ends up with full monthly accrual, tied out financial statements, cost basis inventories that reconcile with the financial statements and physical inventories, cash postings to cost centers. So it's actually simpler. And one of the things to point out is that oftentimes producers who want to accomplish some detailed analysis end up having to do splitting a lot of expenses at the transaction level, at the cash level, and splitting them out in much more detail than what they probably anybody's willing to put up with. And so this is you and bring in Eclipse, which does the automatic postings, inventory adjustment, work and process adjustments, allocations, and the idea is you need to make this to mirror your business, but it doesn't have to get overly complex. And so our growth path, there's method C. We're looking at effort on the x-axis, value on the y-axis, and you see, and I've got a little an arrow that isn't showing up right now, but it's method C doesn't have much effort. It doesn't have much value. Method ABC is value, but it's going to take effort. And method A has a lot of effort because it's a lot of manual posting and limited value. So we look at the different combinations of things that we can track in, and as we layer things in, we get to just centers are the lowest level of detail in method A. Method B, you can get to go to projects in method ABC, and we can look at the other levels here as we're tracking. But really thinking about what segments are important, we want to break things down into most logical segments, starting with a cropping operation, commodity, crop year. Those are critical things. Do you want to go to individual fields, or just have a single field for crops? I mean, there's a lot of ways we can shortcut the system to get people started. We have folks doing pure activity-based costing with whole bunch of different cost centers, sports centers. But I've also done operations where they just have all their equipment in one big bucket, and they allocate that by acre to fields. Not very precise if you're raising more than one crop, but it gets you started. And there's the effort and value. So what we're trying to get to is to be able to control the same granularity as you manage, and be able to do these kinds of intercompany transactions and simultaneous cash accrual and market values, which Daryl will explain here in an upcoming presentation this morning. Here's a tool that can help you think through the landscape and where you fit into that. And this is this is Farm Financial Standards. It's a free document. Let me know, and I'll send you a link to it. It refers back to the management accounting guidelines and the financial guidelines. But here's our stages, very much like what we've talked about in method A, method B, method C. The idea is trying to define where you're at, what your current state is, what you need to do, and there's a path to get where you want to go. And so, here's some of the things that we find that makes challenges. We've got producers have no inventories, so we started opening balance. We just start opening up a balance sheet and assigning some assumed costs to get them going. We also have inventories at cost and inventories at market. And if you actually have a formal balance sheet in your financial statements, we will take those dollars and allocate them to a particular project or projects or groups. And the thing that we'll discover is that those are probably plug numbers and pretty arbitrary. And as we go through the year, we'll find out that they're making a lot smaller margin than they thought, or larger margin than they thought. And you got to go force that thing through a cycle. Very common situation with sow herds. They're trying to guess what a cost of weaned pig is, and so there'll be some big margins and variances early on, simply because we're starting with an arbitrary number. And plugged activity costs, another way we can get things started. Activity-based costing, we're using a standard cost, and you say, well, what's it costing you on a per acre basis for corn harvesting? Well, I think it's $40, $45. That's what the custom farming charge would be, and so we say that's good enough. Let's get that put in. Let's find out what that is. It may take a couple of years to find that out, but at least we're coming up with some some meaningful standards to get things going. And the challenge is, there's out of balance books is probably the critical thing. People want to get started, but the inventories don't balance. They don't have a balanced balance sheet. If you're going to go on the journey, you really need to get that done, and we bring in accounting help if that's important. And then I think just the process. Two tools. One is a layer in data, be able to start simple and then go to more complexity as we go along. And then the other part is human resource training and ultimately technology, reduce the complexity of onboarding. Okay, I've set the stage for Daryl's presentation. I'm going to turn things over to him, but any questions in the...
Norm, you've got some comments in the chat.
Oh yeah, I do have 2 chats. Okay, let me see what we got. Okay. The implementation guide is a free document. The Farm Financial Standards Management Accounting is $30. The financial standards for agriculture is $30. You go to Farm Financial Standards or ffsc.org. You can order it right there online. You could order, yeah. But the implementation guide is free, and I can send that to you. And that implementation guide, you can download that from Farm Financial Standards as well. So I would start with that, just a roadmap, because there's just a abundance of information, wealth of knowledge that will result in a poverty of attention if you're not careful. But there are tools available, and we're not trying to establish our own world, our own definitions. We rely heavily on the work that was done. And the management accounting guidelines is one of the case studies is all on FBS software, so you can sense how that works. I wouldn't recommend using that as a template for your operation, because there's unique things about that case study, and this is management accounting. We're trying to balance it to the operation, and I've changed my philosophy a little bit since we did that in 2004.